Japan's economy dipped into a technical recession after unexpectedly contracting in the fourth quarter.
21,891, beg your pardon, is the 76.4% retracement of the fall that we saw.
Morgan Stanley today has come out with a very interesting note on the entire utility space in India. What they're saying is that in the next decade, they are forecasting over $550 billion of capex.
They've moved their valuation methodology to, the more traditional DCF and price to earnings multiples itself.
You've got the Nifty Bank, which is also starting about 60 points higher, make it 45 now.
Our focus will be the large PSU. I think they are still relatively very cheap.
We are very happy about the results this quarter.
So even the Supreme Court had observed that there does appear to be some form of selective confidentiality.
As sources do tell CNBC-TV18 that Federal Bank has shortlisted a few candidates for the MD and CEO role.
Domestic airlines have started cancelling flights to and from Mumbai till the 30th of March.
Quite a choppy market that we are seeing right now.
Well, that was the day so far. You're with us here on Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surbhi here in the studios. Nigel, of course, joining us from the newsroom floor. Guys, hi, good afternoon. We're kicking off things. I don't know, it's bullish or it's coming off. I mean, it depends on at what time you're hitting air, right? I mean, if it sort of started at 2 p.m., the market was up 90 points. And if you're starting now at 2:30, we've only got about 40 points or so. So that kind of a day. But nevertheless, I mean, we saw a very sharp rally starting at about 1:30 or so. That's the point where the market took off. And then, of course, we saw 90 odd points in the Nifty. And as we start the last hour, really, those gains have been cut in half, nearly in half. HDFC Bank, and we discussed this last hour yesterday, and in the morning as well, we were talking about how for the market, for the Nifty, the frontline indices to perform, private banks which have been doing nothing, they've got to start to perform. HDFC Bank is starting to perform. I mean, the recent low was 1350 and has moved up about 50-60 rupees from there. So it's the top contributor to the Nifty. And of course, by far, the top contributor to the Nifty Bank as well. SBI is up another 2% the last I looked. So yesterday's 5%. The breakout happened last Thursday after a 15-month consolidation period. And SBI is doing just fine. We were past on the Nifty. We were past 21,900. Although I think with this give back that we've seen, we are just under it now, 21,895. 21,900, by the way, is that resistance. We, by the way, in the morning at 9 o'clock, when we opened 9:15, we opened exactly at 21,900, 905, and then sold off. So we'll see. A cohort of PSU stocks are doing well. It's oil marketing, it's standalone refiners, it's just pure upstream companies like Oil India. And of course, there is the entire metals and mining in the PSU space, which is doing well. Banks, PSU banks, I mentioned SBI. Advanced decline is about 2:1. So it's not a bad looking screen, but it's not very definitive either, with the market looking a little undecided. Reema.
Well, particularly it's the oil and gas PSUs where you are, stocks are flying and you're seeing a lot of buying. So MRPL is now up 18% at a fresh 52-week high. Chennai Petro has a gain of about 8%. Oil India is up 12%. HOEC, a mid-cap company, and that's seeing a double-digit up move. On the banking front, while HDFC Bank is, fighting back and it's up 2%, today you are seeing weakness in Axis and ICICI Bank. So the gains in HDFC Bank are coming at the expense of the other two, large cap private sector financials, where Axis Bank is down over close to about 2%, and ICICI Bank too is under pressure. ITC and HUL are the other two stocks dragging their feet today. So the Nifty FMCG index too is a bit subdued. But yet, on the index per se, you've got a gain. The Nifty is up close to about 60 points.
Absolutely choppy, erratic and volatile. I mean, really not an easy market to perhaps trade if you're a day trader, and that graph really says it all. And let's see how it closes out. Mahindra & Mahindra has been the stunner, and we'll talk more about that as we go forward. The market's very clear that it's not so concerned or perturbed about the farm equipment business, the tractor business right now, and the weakness there. It's liking whatever M&M is doing in terms of its new launches, its SUV portfolio, and the fact that the commentary of the management has been fairly robust when it comes to at least the SUV side of things. So that's one stock that's been doing very well. And the other thing in this market is PSUs. If there's one thing that this week has taught us, is that the PSU story is not over. Remember the huge shakedown we had on Monday? Well, it seems distant memory, because for the week, there was that Monday knock to take care of, but the recovery has been far more, because the CPSE index, the PSU index, the PSU banking index, all of them are up around 3.5% for the week. So that's one thing that stands out quite clearly. And of course, the fact that the mid-cap market has also come back with, quite some style and flair. Nigel, so not too bad, I guess, from the broader market perspective.
Well, that's right. Things looking pretty okay, actually. And if you see a bit of a follow-through after yesterday's last hour surge, well, the bulls will be quite happy. But let's find out how Nagaraj Sethi is viewing things. Hi, Nagaraj. Good afternoon. Good to see you in. What's the view then on the Nifty from here on? We tried to make that bounce towards the 22,000 odd mark, but it is met with some resistance. Do you think the bulls have enough to take it past that mark?
Hi, good afternoon. Yes, Nifty has been showing a sustainable upside bounce since last session, but things are not completely out of the wood because Nifty is facing resistance around 22,000, 22,100 levels. There is no enough strength to break above this hurdle. The consolidation moment, range-bound moment with positive momentum will likely to continue at least for some more period. I'm expecting at the higher level, Nifty could once again reach the important hurdle of around 22,100, 150 levels before shifting into another round of downward correction. So the trend remains up. The bulls are slightly moving up. They are making a way towards the new all-time. Slowly, gradually, market is likely to move up.
Okay, thank you for that. That's the index trade. What would you recommend on stocks, Nagaraj?
Yeah, broader markets have also moved up very good in the last couple of sessions. We have seen a higher bottom formations in mid and small cap segments. And I have two stock picks from different sectors. One is from SAIL, Steel Authority of India Limited. SAIL has been in a sharp downtrend in last week and recently from 115, 116 level, it has formed a bottom reversal and moved up. Currently placed around 125.70, 125.60 levels. One can look to buy this stock at this point of time, and upside target would be around 134 and 120, 119 can be placed as a stop loss. Second is the PSU bank and small cap banks like Bank of Maharashtra. The way it has moved up recently and after a small correction again started to move up from the lower levels, it is looking like it likely to continue its upside momentum in the near term. It has formed a higher bottom around 55, currently placed around 60-30, 60-40 levels. One can look to buy at this point of time and wait for the upside target of around 67, 68, and one can place a stop loss at 59.
All right, Nagaraj, thank you very much for those trading calls. We will come back to you closer to 3 o'clock and try and get some final strategies in. But thank you for now. Let's move on. Now, one of the big talking points in trade today has been this Morgan Stanley report where they've raised their expectations, target prices, etc., on a whole bunch of power stocks and even other companies that are, part of the power ecosystem, including BHEL and the Torrent Power, etc., and many, many more. Vivek is joining in to explain the rationale to us. So, these stocks have already had a pretty good year, Vivek, but Morgan Stanley thinks that there's further upside?
Absolutely right. They believe this powerful rally has just begun. In fact, what they're saying is that they are forecasting a capex of over $550 billion in the next decade as far as the power sector is concerned. They're saying that India is building energy security and momentum in its energy transition. Along with that, they're saying while power demand is rising, the supply side constraints are right now becoming a bit more complex, and they believe India's power demand will rise at a CAGR of 7.4% from FY24 up till FY32. Now, what is it that they're doing in terms of individual stocks and what are the individual stock calls? Number one, they've gone ahead and upgraded BHEL to an underweight. What they're saying is that given the fact that Indian government has said that they would be increasing the thermal power capacity up to 80 gigawatt, they believe that BHEL is well poised and the best poised, in fact, to go ahead and construct the required thermal power plants. On the back of that, they've raised the target price to 220. As far as utilities are concerned, what they believe is that they believe state-run regulated utilities are better than independent power producers. And NTPC, they continue to have an overweight stance. Target has been raised to 390. What they're saying is that the company is well positioned to benefit on India's focus on both energy security as well as energy transition. Power grid, they believe that along with large thermal capacity addition, there will obviously be a requirement for transmission capacity as well. On the back of that, they continue to remain positive on Power Grid too. Tata Power, they believe that the capital allocation strategy change that the company has from utility scale renewable energy products towards pump storage hydro projects is something that they need to keep an eye out for. They have an underweight stance, but they've raised the target price to 308. And lastly, Torrent Power. They're quite positive on the stock, but they have an underweight rating. Target's been raised to 940, but they believe that the current price has gone ahead and priced in all of the positives that the stock has to offer.
Okay. All right, Vivek, thank you very much for getting us the latest on that Morgan Stanley report. With that, let's move on and welcome our first guest on the show as well. Deven Choksi, MD, DR Choksi FinServ, is with us now. Deven, good to have you on the show. So before we get started with other stuff, let's just get your opinion on this. The entire power space, the fact that it's already had this rally, do you still think that there are more upside kickers left, and would you be a buyer anyway?
Yeah, Sirvi, good afternoon. Well, if you look at, I think, within the generation space as well as, I think, in the transmission space, and particularly taking care of the thermal power segment per se, I think the valuation-wise, probably, I think, still the values are not so expensive at this point of time. Look at, I think you've been discussing about power grid, and if my number goes right, I think the stock is still trading at around 16-17 times price-earning ratio on a trailing 12-month basis. So, given the kind of opportunity that one has in transmission, of course, I think it demands further capex program for most of these companies. But given the kind of opportunity that they have, I would think that the business environment would remain reasonably strong for transmission companies like, for that matter, Power Grid or even Adani Transmission, which is an energy solution. So all those companies, I think, probably remains relatively more on a stronger footing. Companies like Tata Power, which is significantly growing the renewables portfolio, that is another area where probably I believe that the values are getting built into. But the market has actually, I think, ran up little ahead of time in many companies, even except some names, I think, in public sector. I guess I think that is the reason for which some amount of, I think, cautiousness is required at this point of time. Maybe one can buy in a corrected market into select names. That would be the approach, could be more prudent.
Okay, that's the call coming in on power. Another mover today, Deven, has been Federal Bank. Now, we know the current CEO and MD, Shyam Srinivasan's term comes to an end in September. The RBI had asked the bank, as a part of succession planning, to, give two names to them as their recommendation. And what Abhishek has learned from his sources is that Federal Bank has shortlisted Kotak Bank's director, KVS Manian, as a CEO candidate, and they submitted that name to RBI for their approval. The stock is up 3.5%. Considering that there is always uncertainty in the run-up to any CEO announcement, how would you view this name of KVS Manian as the next in command at Federal Bank?
Certainly, I think that speculation one would keep it aside for the time being. But the point which remains, I think, very strong in this case as well, that valuation-wise, the stock is not so expensive. If you look at the price to book value, probably I think on a less than 2 times the price to adjusted book value, I guess I think the stock is not sounding expensive at this point of time. And another important point, I think, which I believe that I think in many of the small and mid-sized banks would be the area of consolidation going forward. That's where probably I think all eyes would be. I don't think that immediately putting somebody's name as a CEO will make the thing change completely for the bank. They will have to put across, I think, the strategy as to how would they grow the size in coming years. But one can definitely say a downside is protected at this point of time in the valuation. Maybe I think upside could be more targeted once one looks at the strategy which can come up going forward.
Okay, that's Federal Bank. By the way, we'll just get to Zomato as well. That's another stock on our list. But before that, look at the rise on Mahindra and Mahindra. Literally Mahindra rise. I guess the logo is really standing true for the stock today. 7% and counting. Big move coming in on M&M. Now, the stock has, had a great year, obviously. Last 1 year is about 28-30%. And this year it hasn't moved. This is the first big day for M&M so far in 2024. Now, brokerages, I was looking at the targets after the results came in yesterday because there was this whole debate about farm equipment segment is, a little weak, SUVs are fine. But look at the targets. A lot of the buy calls are around that 2,000 mark on Mahindra and Mahindra. The stock right now is below 1,800. So CLSA Nomura, for instance, they still think there's a lot of headroom on an M&M. Weighing on this debate, Deven, Mahindra and Mahindra, I mean, did you find something so unique in the numbers, or was it the commentary to fire up a stock the way it is fired up today?
One needs to look at the numbers in perspective. I think you had very significantly lower base last year, particularly into the auto segment, the SUVs in particular. And I think that segment has actually significantly contributed both in form of top line as well as in form of profits. That is where probably we are seeing the percentage-wise growth which is much higher. However, we must remember that I think in the current quarter and hereafter, I think the base has already increased. So the likely growth in the coming period is going to be moderated. It's not going to be, I think, a sharp growth which one has seen in previous quarters. So from that perspective, I think we'll have to be a little mindful about, I think, the upside. I would think that the great story in auto segment, farm equipment segment, even including the electric three-wheeler segment, they have a good story to talk about. But the fact is that I think the upside is remaining completely limited at this point of time. So maybe I think market corrects, and at that time you buy for 20% plus kind of a gain. That may be, I think, a better strategy to play with.
Okay, so Deven's being a little cautious on M&M, given where the stock is trading at right now. Let's hear out Mr. Anish Shah on the road ahead.
Our message to these companies is, if you believe in India, then make in India. It's not fair to consumers if companies just import from outside without a commitment to the market, especially in the auto industry, where the consumer would look for a commitment that the company is going to be with them for a long term, for the duration that they have the car. The auto industry has been a very competitive one for the last 20-25 years. And at Mahindra, we've actually benefited from that competition. The cars that we make today are world class. We are ready with hybrids. In fact, we had to make a choice whether we go ahead with hybrid or EV or both. And the choice we made was to go with EV because hybrid is really an extension of ICE. If we look at the benefits of hybrid, it has slightly higher fuel efficiency. Emissions are more or less the same, and the cost is higher. So hybrid doesn't really change the game as electric does.
Okay, all right. Well, that's about Mahindra and Mahindra. But let's get in Manglam. Manglam's here to tell us about Zomato. Manglam?
Well, about Zomato, you know, there has been a note that is coming from CLSA, not that it needed a reason to kind of move the way it has been moving over the last many months. But today's up move can be attributed to CLSA, you know, where they've maintained their buy call on the stock. But importantly, they've increased their target price from 181 to 227 rupees, making it among the highest target prices that we've had on the street on Zomato itself. Why is it that they do that? Well, because one, food delivery and quick commerce are now on a stable profit path. So because there is visibility of profit and there is visibility of growth, they've moved their valuation metrics to, you know, the more traditional DFC and price to earnings multiple itself. And here's where the interesting part is the discounted cash flow methodology brings them a net profit of close to 5,100 crores or an FY26 EPS of nearly 6 rupees per share itself. And they've ascribed a valuation of nearly 41 times multiple as of FY26, which values them at a 30% discount to all the other QSRs, which are traded at around 58x. And that brings them to this 227 rupees per share sort of price. Two interesting things here. One, that they're assuming by FY26 the company will turn 5,100 crores in net profits. And secondly, the quick service restaurants, the multiples that they're trading at 58 times in absence of growth. It's extremely interesting that Zomato would be ascribed a multiple 30% discount to it.
Okay, all right. Manglam, thanks so much for that. Deven, what do you make of this one?
Well, I guess I think you already have a company which is quoting at around 1,35,000, 1,40,000 crore market cap. Even if one has to assume that I think they will make 5,000 crore worth of I think net profit in FY26, which looks I think a far-fetched at least at this point of time, because I think given the current numbers in the quarter, I think you are talking about 130-40 crore kind of a profit EBITDA level. So from that perspective, I think one will have to be a little bit mindful about the possibilities going forward. If that does happen, nothing like it, I think market will give thumbs up. But if it does not, then probably I consider the stock remains expensive at this point of time. Maybe I think we'll see whether the kind of numbers which are being projected are likely to happen in a couple of quarters, and then probably take a call on the subject.
Nonetheless, it is a momentous occasion, right, where you have finally people on the street talking price to earnings for Zomato.
Because there is earnings now.
We've come such a long way. That's what I was thinking.
PE
From
needs
price to
E.
sales, now there's price to earnings. And I think Mangalam put up that very interesting analysis that if you go by PE, then it'll be trading at a discount to a lot of the QSRs. So let's see how the whole valuation game will play out, and the analysis is going to play out on a stock like Zomato. Quick break on that note. We'll come back with a lot more on the other side. And also, in a bit from now, we'll get a conversation going with Vaibhav Sanghvi of Ask Hedge Solutions. So stay tuned for that as well.
Welcome back. Well, let's focus on NMDC. That's the one that's doing pretty well in today's trading session. As I told you earlier, the numbers were very good and the stock is holding on to those morning gains. So just to brief you on the numbers, the EBITDA number was much better than estimate, close to around 8 to 9% beat out there. Margins came in at around 200 basis points higher in comparison to what we are working with. And that's because of realizations, because volumes we already had, the realization jump was even better than expected. So one factor was the operating leverage. Second factor was the realizations being better. And the third factor was the cost went up, but as a proportion of sales, well, that in fact came down. So that as well was in their control. Besides that, they went ahead and they declared a dividend of close to around 5 rupees 75 paise. So the street likes that. And the con call just got over. And out there, they're maintaining their sales guidance of close to around 47 million tons for this year. They're saying that iron ore prices are expected to be more or less stable. And they're saying that, in fact, the targeted capex for the next year, that's FY25, should be to the tune of around 2,000 to 2,500 crore rupees, though they're sitting on a cash balance of more than 11,000 crores. On NMDC Steel, which is the unit that was demerged from the current listed entity, well, they're clocking close to around 100,000 tons in the month of January. And that compares with around 60,000 in December. So gradually it's ramping up. And when it hits 150,000 odd, it could generate some money. For the time being, it's loss making. Well, Deven, what do you make of this one? NMDC expected to be good numbers. Numbers are very good. And the way ahead is looking up because they've taken 2 price increases in January itself. Your view?
Yeah, I think that essentially, if you look at, I think the growth that they have produced in this particular quarter, which is after a very long period of time, I think this particular growth has come. I guess, I think given the strategy of increasing the output, I think for next few quarters, you are likely to see relatively higher growth trajectory, particularly because in previous quarters, I think that number was relatively, I think, on a smaller base. Hopefully, if the prices do remain stable, then on the selling side, I think you are likely to see the relatively, I think, stable realization, which is what I think one is expecting out for. And even though there is some amount of impact due to the cost increase pressures which are there on the because of the spendings that they have done, to that extent, I think still with the volume picking up, the things should remain reasonably okay. Valuation-wise, I think the business is not quoting expensive at this point of time, so that is an added comfort, as I would call it as. However, I think one can buy this particular company with the natural growth that they assume due to the infrastructure spending that this country is having and due to the commodity demand that is being experienced currently. So one could possibly buy these stocks with a minimal downside at this point of time that one is observing currently.
Okay, Deven, we'll leave it there. Thank you very much for joining us. It's a pleasure, as always, having you here on CNBC-TV18. Well, Muthoot Finance is under pressure. Actually, it was higher, about 3% in the morning. And then there was, the news about the guidance being perhaps brought a little lower. Abhishek is here with the fine print. Abhishek.
Well, Q3 FY24 results were better than expected in terms of AUM growth as well, which came in at 23.3% YOY and about 3.2% sequentially. Analysts were pegging this to be about 22% YOY and 2% sequentially. The gold AUM growth was about 21.8% YOY and about 2.5% sequentially. However, this largely led by gold prices. Gold prices were up 15.3% YOY and about 9.6% sequentially. Net interest margin has remained stable, at 10.88% versus 10.88% in the previous quarter. However, in the con call, management has guided that cost of funds will rise over the next 2 quarters. So, Home Finance subsidiary, the AUM growth was strong at about 26.5% YOY and 10.5% sequentially. Asset quality over there has improved. Gross NPA ratio is down to 3.5% versus 4.3% in the previous quarter. In Belstar MFI, the AUM growth is pretty robust at 65.5% YOY and about 12.2% sequentially. However, the asset quality took a hit over there. Gross NPA ratio has increased to 1.88% versus 1.48% in the previous quarter. Across lenders, we are seeing pain in the rural segment, and MFI portfolio, whether banks or NBFCs, is deteriorating. So in the con call, management has given a guidance of loan growth to be around 15% in FY24. Their earlier guidance was about 15 to 20% guidance for FY24. In terms of NI and PAT, it's a beat on our poll. Back to you.
Okay, all right. Abhishek, thanks very much for that. Muthoot Finance, the stock's done, it's had a bit of a ride over the last 1.5 years or so, from about 1,500 odd rupees, which was the high, fell to about 900. It's back at about 1,340. but has not really gone anywhere for the last few years in terms of gains. Vaibhav Sanghvi is with us, CEO at Ask Hedge Solutions. Vaibhav, good to have you with us here. Thanks very much for your time. Just wanted your thoughts on the entire sort of the PSU rally that we're seeing, Vaibhav. If something, especially something like a PSU, which didn't do very well for years and on end, right? Because there was a perception problem as well. But a lot of those things started to change. It started with banks, essentially SBI, spread to other areas. Then there was defense, then there was railways. I mean, who would have thought? And typically what happens is if price moves up in a sector which you've typically stayed away from and moves up sharply, I mean, you're frozen, right? You're looking at the price go up, but you can't buy it because A, you did not really sort of own it at any point in your investing career. And B, you're doing something new and price has already moved up. What's the best way? I mean, if there is more here, I mean, mutual funds are still launching PSU funds. For example, the Quant PSU NFOs closing today. Would you recommend sort of retail common investors to allocate some money in these funds?
See, Prashant, I think you bang on target in the sense that because you've seen over a very long period of time that PSU basket typically behaves in a particular manner. To kind of break out from those kind of ranges, and when you are looking at a new price altogether, it's kind of a moment where it's very difficult to grapple what further decisions to be taken. The way we would probably look at on this basket is we will identify probably the industries where the structural reforms have been happening, in addition to a good policy support which is coming about now. Something like a Make in India, PLI, or probably oil and gas reforms, which has kind of happened in terms of price mechanisms. I think identify those sectors where there is a catalyst from where value, which has always been the case, has a possibility of unlocking it as well. So this is where we would probably focus on. And getting too bogged down in terms of the historical valuations and historical price band would probably make it even more difficult to kind of participate in this whole rally.
Actually, it's like phases, right? The first phase is disbelief. Then you start to say, well, we've seen the story many times. It'll all promptly come down. I don't know what phase. Are we in phase 3? Or this is something really new, right? This time is really different in that sense. Can you really argue for private sector multiples for many of these PSU kind of companies because governance, etc., is improved? And arguably it has. Cyclical, I mean, for example, banks, right? Maybe credit costs will not remain as low. It's not possible. Things are cyclical, so credit costs will rise. But can you argue for names like at least the big ones, SBI, BOB, etc., for multiples about 1.5, 2 times? I don't know, Vaibhav. Your thoughts?
No, Prashant, which is where I would probably say that, when everybody clubs every PSU under the same umbrella in terms of everything has to rally, then there is an opportunity of, distinguishing between what should ideally move or probably what should have, not moved, at all. So there comes an element where how to distinguish is, extremely important, purely because then if God forbid something kind of probably adverse happens, then the subsequent crash or subsequent kind of price movement can be very, very painful. So stick with those sectors where, as you rightly mentioned, that there's a change in terms of governance, then change in terms of an outlook towards expansion, growth, and is being supported well by the policy measures and structural reforms.
Let's take that conversation one step further. You have PSUs across various sectors. They're in banks, oil marketing companies, oil refiners, defense, railways. Amongst these sectors, which is a sector where there are still tailwinds? Structurally, as you pointed out, there's growth momentum.
No, I think, what we have seen in terms of the Make in India program and defense-led kind of industry, I think there is long tail, there's a long tailwind here in terms of we will see these, continuing in terms of order inflows, higher indigenization, and so on and so forth. So that support will remain. In addition to that, I think in OMC companies, if the price is are kind of not kind of intervened, I think there is some further leg in terms of their movement. So those are the sectors and areas we would probably focus on. Whereas in case of PSU banks, we are not as yet a very firm believer in terms of whether we want to have the price to book multiples as equal to your private sector banks. So that is where our probably view will probably differ.
Okay, hi Vaibhav, good afternoon, good to see you in. Nigel on this side. A couple of quick questions. You know, our markets were running up on hope of earnings. And this past season earnings haven't been bad, right? I mean, it's been pretty okay. The problem is top line growth hasn't been that good, which could tell you that going ahead, there could be a bit of a scramble for market share that hurts margins. Do you think that anticipated earnings will actually, we will fall short out there? Because that's the biggest driver ultimately.
No, of course, Nigel, I think what we've seen in the last 2 quarters, there has been a massive tailwind in terms of the margins, and because of which we have seen very decent earnings from the corporates. Now, going forward, what we think that given the light that, overall consumption is kind of a little bit weakish, where corporates will start kind of, eyeballing or probably focusing on the market share at the cost of margin as well. And as raw material prices also kind of start moving up in the coming quarters, we do expect that there is a possibility where we have already seen the best of the margins, and we may see probably that as expected, in terms of the earnings growth, which is about 14-15%, by the street for the next few years, we may be marginally disappointed in terms of the overall earnings, how it can turn up. Which will also lead to the overall market movement as well, purely because we do strongly believe that the markets will follow earnings from here onwards, as because the time of re-rating has got over. Even if it maintains those kind of valuations, then may be disappointed by the earnings in the next few years.
Okay. So, Vaibhav, hi, afternoon. Then sort of sum it up for us. On the long side, what are the key bets that you're going with right now in terms of, if not stocks, at least just thematically? What would be the top longs then, as of now?
See, I think from when we talk about long, on the portfolio basis, as against our earlier view where we, really thought that global markets are kind of crashing, what we are seeing is basically an evidence of soft landing actually happening, and probably the interest rate cuts not as quickly coming as quickly as everybody would have expected. So from a global standpoint, where earlier we thought that global economy will crash, herein is where we do think that we are turning slightly bullish in terms of the technology sector, where we do see that sector is kind of bottoming out. At the same time, from a local perspective, there may be a tactical trade on the private banks purely because they've been hammered. But I do think from a medium to long-term basis, we'll focus on industrials, renewables as the opportunities where we would probably ideally want to place our bets on.
Okay, you just to complete that point, you said private banks, but that's only a tactical trade. So you think that more on a more fundamental basis, this pain is going to last for a while, this underperformance?
See, let's kind of be, from a overall sector basis, let's analyze in the sense that we have seen the best of the asset quality at the time of, best of the margins as well. And given the light that incrementally we may see some amount of deterioration in terms of the asset books, at the same time margins kind of getting compressed. My sense is basically on an overall sector basis, we do think that it would be neutralish or probably in-line performer with the markets rather than what we used to earlier assume in terms of being outperformer. So of course the valuation is slightly in terms of their support, but from the earnings standpoint, I think this is a segment where we may see some amount of downgrades going forward.
Okay, all right, Weber, we'll leave it there. Thank you very much for your time. It's a pleasure having you with us here on CNBC-TV18. Thank you for joining us. We'll take a quick commercial break here. As always, we'll get you trading ideas with our technical experts on the other side. Stay with us.
Welcome back. Well, in terms of stocks that are moving around as we speak, First Source has moved to the high point of the day. Big up move is what we're seeing on that one. So keep an eye out on that one. And on the flip side, Vedanta, there was a large trade that took place. Yesterday, it ended at the high point of the day. Today as well, the street was optimistic. There's going to be some news flow. But it appears for the time being, at least, they're a little bit disappointed. So explains why that stock has moved a little bit lower. Nagraj Sethi is back with us. Nagraj, 21,900 virtually unmoved in this last 45 minutes or so. The Nifty bank has come off a little bit. Your take?
Yes, hi. Nothing has changed in the last half an hour. Same market is at the same 21,900 and Bank Nifty at 46,200 odd levels. My view is remain intact. The market is in a range bound action. We are gradually picking up the momentum. This gradual upside momentum is likely to continue for at least for the short term. At the higher levels, 22,000, 22,100 is going to be the strong resistance. In fact, 22,100, 150 is going to be a strong resistance. And I'm expecting another round of downward correction from the higher levels. So for the short term, remain long with the market. And Bank Nifty as well, after moving into a consolidation over the last 3-4 sessions, it currently making an attempt to move above the consolidation band of around 46,000, 46,200 level. This is positive indication. It looks me that target of around 47,000 odd levels in the next short term. So net to net, both indices are looking positive for me.
By the way, jewelry companies are moving up. So in the frontline pack, you've got Titan, which is shot up. Titan is up over 1%, and on the mid-cap end, you've got Kalyan Jewelers, which has suddenly spiked up. And another pocket of strength has been the railway companies. So IRFC, IRCON, RVNL are back, and they're up close to about 3 to 5%. So big move seen in some of these names in the last 5-6 minutes. Gurmeet, I know from our past conversations that many of the Tata Group companies make it to your buying list. We've spoken about Trent in the past. But in the jewelry basket, you've got Titan, Senco, Kalyan, and so many others. And Kalyan has been reporting very strong numbers. Where do you stand on the jewelry companies ex of Titan? And is Titan a buy at current levels?
We continue to hold Titan in some portfolios. We haven't really bought at these levels incrementally more for the valuation. We did add it a little bit when the stock came at around 2,600 odd levels, 2,700 odd levels last year. And other jewelry business, I think you have to probably give more time to the governance things to phase out. I think the market has some bad experience without taking names, in the past, because this business also is now becoming more formalized, less reduction on cash, etc. And I think on wearables, on smartwatches, on eyewear, on as a lifestyle brand. I think Titan is making more progress. So dependence, obviously, still jewelry accounts for the bulk of it. And also, it's kind of the SIP book they have, which we call as the Golden Harvest Scheme, which gives them regular, not only inflow, but also in terms of give them some kind of a hedging protection on gold prices. So we continue to like. Something unrelated we like, which is more related to lifestyle and more aspirational, is Ethos, the watchmaker. Almost 60 brands, of which 45 they are exclusive. And I think what we are seeing is anything trending, anything which is aspirational, it seems to be doing well. So that's the other stock we have in the book.
No, Gurmeet, yesterday was Valentine's Day. I don't know, maybe all you men contributed, and the expectation is that we've got good sales, and therefore this is the post-Valentine's Day impact. I don't know, Nigel, and we've got Prashant here. So maybe you gentlemen were out there with your shopping bags, and that could explain the excitement today. Yeah, I see Prashant smiling. Can we have Nigel on the screen as well? Nigel's missing. Let's see all the gentlemen now.
See, so to be all the gentlemen on the screen, but all of us, I think, are confirming that we haven't given anything. But have you received? Because it seems you're in a very good mood today, so maybe you could be at the receiving end, which giving you this, this narrative.
That's just the company. That's just the company I keep on this show. So it's great to have you here. But since we're talking lifestyle, Gurmeet, let me throw in another stock. Now, I don't know if we should start looking at it as a lifestyle play. RateGain is the one I'm talking about. It's a software company, but it's a software company that's into pricing for, hotels, hospitality, travel, leisure, and that's where the big spends are going. Stock's doing very well, by the way. Let's put it up right now. RateGain's up about 7%. Is that a good year so far? Has this come on your analysis table? What do you think?
No, we do track, and one of our clients actually has a pretty sizable stake in this. So we do track it. It's not weighted to the portfolio. but it also is a beneficiary. I call it as a sugar rush post-COVID, spending which has happened on travel, on lifestyle, etc. But we continue to buy directly hotel stocks. We have Indian hotels. We've got God has been kind with decent returns. Lemon Tree we entered pretty early, especially when they were about to commission Aurika in Mumbai, which was almost 600 rooms. If you see the next 2-year guidance, they will add almost 3,000 rooms, and the mix will change to 50% owned and 50% management contracts. So it makes the asset, the complete model very different than what the traditional hotel model was. So I think that will continue to do well, and Lemon Tree is more in the mid segment. So that also gives you a slightly better visibility, both in terms of corporate as well as leisure travel. So far better portfolio as well. So we continue to like that space. I think despite the upside, it's still a buy on dip kind of space.
Surbhi, it's an analogy. I don't know how accurate, but like you can buy Indian hotels or Lemon Tree, and you're buying a particular property and betting that that'll do well. But rate in the auto parlance, this is the auto ancillary. I mean, they supply to everybody. So you can, Indian hotels as a customer would be a customer, Lemon Tree is a customer, Marriott would be a customer. I mean, so that's the perhaps, and of course, asset light in that sense, because they're not running hotels, just software. Big jump actually. It corrected. I mean, in the recent fall, it did come off very sharply. I think the low recently was about 770, but right back in 2 days flat. That's the kind of market we are in. Gurmeet, I don't know if you track Inox India. Recent listing, the listing I don't think was very good. Did fall below the IPO price for a while, but has done well since.
Yeah, so Inox India, another one which had a corporate action on bonus is KPI Greens. Great commentary as well. We had the other like IRDA doing pretty well. So we own Tata Power right now. And I think, and it's done well in the last year or so. We've discussed it multiple times. I think it'll also be one of the beneficiaries, although the numbers were slightly suboptimal. If you take off the one-off income, the coal business did not do well, and renewable is yet to fire with which Street expects. But it has a solar panel play, it's an EV charging play, and then it's a traditional play. We like NTPC. I think the valuations are still reasonable. And we also like power grid. So we are playing it through the more traditional sources right now. India needs to add about 300 gigawatts over the next 3-4 years to prevent an energy crisis. And I think the entire ecosystem will do well. So we are playing the generators and the transmission line guys. And the valuation comfort in PSUs are still there. Some of the PSUs, I personally think the capital allocation, the discipline, the work culture is undergoing a change. It's still far from what you expect in a private company, but I think some of it is structural in few places.
Gurmeet, till you list Complete Circle, do you want to own a wealth management business? I mean, it's a business you know very well. Novama, for example, right? 10% yesterday, 10% today. Again, we didn't have these standalone wealth management businesses listed till 4-5 years ago, but now we have. Is it a good business? Maybe it's the wrong person to ask the question, but it's
a beautiful business, Vishal, because you look at, for example, SDFC Mutual Fund. They started the AMC with 25 crores capital. Today it makes 500 crore PAT every quarter. Which business gives you 20 crore one-time capital and 2,000 crore year-on-year cash flow, right? Look at Kotak Mutual Fund. It was started with 20 crore. If you see it's still not listed. It's still part of the entire Kotak gap. But, or a CDSL, for example. So we like asset management space. We like the RTA. We have CAMS in the portfolio. We have CDSL in the portfolio.
But is there a difference? Should we differentiate between asset management or Nuvama, or is it fungible? Because
I think asset management is more scalable in the sense that in terms of incremental cost, wealth management requires a lot of manpower. Cost is pretty high. You need to really get private bankers, which are very expensive. So while Anand Rathi and IFL has also done well, Anand Rathi has done exceptionally well since listing. But in terms of ROE, I think asset management is infinite ROE in my view. One-time capital and you just continue to make money once you achieve a scale. SBI Mutual Fund is due, unlisted now, the share is roaring at about 1,100-1,500 rupees. It was about 1,000 rupees some time back. So it's a great space. You're adding 25 lakh new investors every month, Prashant. And the industry is growing 18%. The better ones can actually do 20-25%.
Okay, so mutual funds maybe, absolutely. The growth is non-linear, right? I mean, you don't need the same number of employees to add assets. I mean, the same number can manage much, very, very large amounts. So returns are much better. Gurmeet, stay with us. We have to take a quick commercial break here. We are back with you with more questions. There's 8 minutes to go for close. The Nifty is up about 80 points. Stay with us.
It's a vibrant looking screen as we're getting set for the close. The Nifty quite comfortably cruising above the 21,900 mark. Okay, what do we end with? Gurmeet, let's talk about the biggie itself, HDFC Bank. I don't know, difficult. Do you think the worst is over? What does it do? Does it go into this limbo for a while, or do you think some, buyers come in? Where is the best guess?
I'm also looking forward that at 19th analyst meets will be, I think probably the management needs to spell out a vision. I think obviously the calculation on the CD ratio went haywire. They weren't expecting this much stretch in terms of mobilizing liabilities. I think there will be an impact, that was clear, and that coincided with tightening liquidity. We ask ourselves, is the problem temporary or structural? I think it's a temporary problem. Once liquidity starts easing, I think liquidity is a big thing here, more than the rate cuts. And the interest rate cycle reverses, a lot of these things will reverse. And for the time being, probably the treasury gains will make up for the NIM compression. Mind you, it still makes 16,000-17,000 crore quarterly PAT, which is almost same as RIL. Not a fair comparison, but I'm just saying one is 11 lakh crores, one is 21 lakh crores. So it happens, it happened with ICICI Bank for a long period. It happened with Axis for a long period. It happened with SBI before the SBI taking off. And you go through it. I think the merger timing also, in my view, is slightly, went off with, coinciding with tightening liquidity. So I think it should get to maybe second half of the year should be better for HDFC Bank in my view.
Got it. By the way, Gurmeet, you own Polycab?
Yes, we do, Prashant.
Bought in the fall as well, right?
Yeah. We own about 3.5% in the portfolio.
Oh, okay. It's up 6%. I mean, coming back, still not at levels from where it fell, but it's a decent comeback from the recent low was about 3,800. So it's come up to about 4,600 now. You think it'll do well?
See, Prashant, you get two multiples, one for the earnings and one for the governance. I think the street would want to wait out for the impact, of the surge on, if there was any lapse. I think more clarity once it comes, and if company comes out clean, it can march upwards the way Hero did or a Mankind did or so many others did, right? So I think that probably will decide whether you command a 50-60 earning multiple or you command a 30 earning multiple. So I think for now, so we are holding, we are not adding, we are not exiting. It's made very good money for us. I am personally invested in IPO, but I would like to wait it out before, giving a verdict. There are better plays now in building material after this recent correction in small and mid caps.
Okay, all right, Gurmeet, good chatting with you as always. Thank you so much for being with us and taking all the questions today. With that, we are down to the last 2 minutes of today's session. So let's close it out. We are ending at the highs, ending on a pretty strong note, despite a lot of volatility during the course of the day. The Nifty finally going home with an 84-point gain. That's not a bad-looking screen. And 21,928. Talking about the big movers and shakers, on the Nifty, M&M continues to be in pole position as we're closing out, almost 7% higher on that stock after earnings came in yesterday. Then you have the charge of the PSU brigade, BPCL, NTPC, Power Grid, ONGC, SBI, Coal India. I could start losing my breath. And imagine that's just the large cap screen. Beyond large caps, PSUs continue to rally hard in the broader market as well. HDFC Bank, the stock that we were just discussing, that really powered through and helped the bulls' cause today, up and about. And then you had other biggies like Infosys, Bharti Airtel, all of them chipping in a little bit here and there. So all in all, a pretty good session. Now, Axis Bank is down about 2%. ICICI is down about 0.3%. So some of these large PSU banks, private sector banks, barring HDFC Bank, they were drags. And the FMCG space, very clear declines coming in over here. Nestle, Britannia, ITC, even Lever, all of your big FMCG names on the downside. Prashant.
Absolutely. And, it's a interesting looking screen by the end of it. And I'll just maybe take a quick look at a few other names which really participated. Rate gain is something which we were discussing. Big gains, 9% back at 900. There was TV today, strong gains today. Gensol has had a phenomenal rise and has done well. Venus Pipe was another one. There was Star Cement which did well. Aster DM has been doing very well last couple of days. There's Jyoti CNC. We had the management with us earlier. Kalyan Jewelers, I think we brought that up with our discussion earlier. Novama, we just discussed. And of course, many more names. And I'm not going into the depths of what we saw in the PSU space because actually, by the way, the CPSE index, right? The composite PSU bank index is back at the recent high from where it had fallen about 5% or so. So that's the extent of the recovery we've seen. Well, I think it's time to wrap up with this edition of Closing Bell. From all of us here, it's goodbye. Thank you very much for staying with us. But Markets Forward is coming right up. It'll pick up on all the market action in just a bit. Stay with us.